You're listening to Indications by the Conference Board.
Hello, welcome to this episode of the U.S. Labor Market Roundup, our regular podcast series where we break down the monthly U.S. Bureau of Labor Statistics jobs report and identify key trends in the U.S. job market that business leaders should know about. We also unpack some of the relevant policy implications for the future workforce. I'm Elizabeth Crowfoot, Senior Economist at the Committee for Economic Development of the Conference Board. Today we'll be discussing the September jobs report, as well as addressing the workplace implications of President Biden's COVID-19 vaccine or test mandate for private companies. But first, let me introduce my two regular guests and fellow labor market experts. Gad Levanon, head of our Labor Markets Institute and a regular contributor in Forbes, and Frank Steemers, senior economist at the Conference Board, focusing on U.S. and global labor markets. Gad and Frank, always good to be talking to you. Thanks for being here.
Thanks, Elizabeth.
Yeah, thank you, Elizabeth.
This was a pandemic-tainted jobs report, to be sure. So let's unpack this a little bit. U.S. employers added 194,000 jobs in September, the weakest monthly job gains since the beginning of the pandemic. The unemployment rate fell significantly to 4.8%, and that's down from 5.2% in August. In September, job growth in the private and public sectors differed starkly. Over 300,000 jobs were created in the private sector, led by leisure and hospitality, professional and business services, and retail trade. The gains in leisure and hospitality have essentially slowed to a crawl compared to previous months, but employment in restaurants and bars ticked up a little in September compared to job losses seen in August. Nearly all job losses were concentrated in government, particularly in public education. But that partially reflects that tricky seasonal adjustment that skews job gains and losses in education, especially around the start and end of the school year. While we don't want to overemphasize the job losses seen in education, it could also be partially due to school disruptions that occurred due to the Delta variant. Despite sluggish payrolls, the drop in the unemployment rate to 4.8% was the result of more people finding jobs and people dropping out of the labor force, especially women. Nearly 300,000 women dropped out of the workforce in September, compared to just over 100,000 men that joined. And when it comes to employment, women gained about a third of the jobs that men did. This just highlights that women's labor force participation is tied to available childcare and school disruptions, and that this pandemic threatens to reverse women's economic progress. The unemployment rate dropped for all demographic groups, so men and women, white, Hispanic, and Asian workers, and especially for Black workers, whose unemployment dropped nearly a percentage point to 7.9%. That's still the highest of all reported groups, but still a huge improvement. Unemployment rates are still about 2 percentage points higher than pre-pandemic levels for people of color and about 1 percentage point higher for white workers. With continued constraints on the supply of workers due to childcare, fear of infection, and increasingly vaccine mandates at the workplace, average hourly earnings have increased 6% at an annual rate over the past 6 months. Despite still being 5 million jobs below pre-pandemic levels and overall unemployment growth being disappointing, it's important to remember that these data were collected in mid-September during the peak of the Delta surge, so there is potential for improvement in the months ahead. So with that set up, let's turn to our labor market experts. So Frank, turning to you first, I mentioned this potential for improvement. So we were talking so much before that a lot was riding on this September jobs report. We were all saying during the summer, let's wait until September when schools are back in session and back in person when these supplemental unemployment insurance benefits have expired. And then we'll be more certain about what this labor market recovery is going to look like and if these labor shortages are going to recede. So now that September has come and gone, do we still expect labor shortages to cool off by the end of the year?
Yeah, that's a good question, Elizabeth. We have, of course, talked about it now for a couple of times in these podcasts. I think we are still expecting that labor shortages are going to cool off towards the end of the year. But I think we should also keep in mind that, of course, there were a lot of developments over the last couple of months, especially Delta, job growth really slowed down. We knew that some people didn't want to get back into the labor market because they were fearful of catching the virus. Of course, Delta didn't disappear yet in September. Now it's on a decline, but if we then look at the September jobs report, I'm not totally surprised that we're still seeing slower job gains, that we still had recruitment, the NFIB survey where they ask about recruitment difficulty still being at an all-time high. I'm not totally surprised about that.
And just to clarify, the NFIB is the National Federation of Independent Business,
Right, exactly.
which are small companies generally.
Yeah, that are smaller companies generally. It does give us like an insight how it would be for for most employers. Looking ahead, though, I think we have some more positive developments. Delta is now slowly receding nationally, so that should help some people to return to the labor market. We still think that with the unemployment benefits expiring, that also some unemployed people will now pick up a job and may not hold out for other job offers that they may have declined early on. I think we'll see how big that impact will be. I think the September jobs report was still relatively early, so October, November is definitely going to tell us much more. I think I'm a little bit maybe more certain that we are going to see a decline in labor shortages, and that is mostly due to a recent data point about job openings that came out this morning, where we see that job openings for the first time in a couple of months actually declined. Of course, 1 month doesn't make a trend, so maybe I'm too early to be optimistic about labor shortages receding. But if that is going to be a trend, then indeed we're going to see a slow decline in the severity of labor shortages towards the end of the year. One reason why I'm still a little uncertain, of course, has to do with the vaccine mandates, but I think we're going to talk about more about that later on in this podcast.
Yeah, and I just wanted to add something about the school reopening, because ever since my kids started going back to school, I've gotten an email every week about some child in a classroom being infected by COVID and that certain classrooms are quarantining. And I have told my boss now that it's a matter of time where my child will have to quarantine. So to expect that I will have to be away from work to care for my son. So this whole school reopening is real, and the challenges, it wasn't as easy as I think many of us thought it was going to be earlier on with the Delta variant. So it's definitely a challenge, and hopefully it will recede as time, goes on and as, the Delta variant wanes. But again, I'm getting these emails on a weekly basis. So
yeah, I mean, that's also, we have been saying, like, people, working parents or people who were fearful of the virus wouldn't get back into the labor market because of the pandemic. And yeah, because of Delta, they have delayed their return probably. So yeah.
And then turning to this vaccine mandate too that you mentioned, and I had mentioned this at the top too, that there are, pandemic-related supply constraints in the labor market. We talked about schools. We talked about, the unemployment insurance benefits potentially also having been a constraint. So the addition of these vaccine mandates is also another twist and turn, right? So the vaccine mandates that the federal government and more private employers are implementing now has implications for the workplace. So at the Committee for Economic Development of the Conference Board, we recently surveyed CEOs and company directors about the federal mandates requiring companies to ensure that their workforces are fully vaccinated. So we asked 3 pointed questions about how business leaders view the mandate. And I highly suggest going to our website for those that are listening at ced.org/reports to take a look at the full survey. But quickly to summarize the results here, we had 3 main findings. First, nearly 2/3 of the surveyed business leaders support President Biden's COVID-19 vaccine or test mandate for private companies. But more than half are concerned about their ability to implement the mandate. And third, roughly 30% of respondents believe that the decision has negatively impacted their employees and the overall company culture. So, Gad and Frank, I wanted to sort of throw this back at you to get your reactions about what you think the impact of these mandates is going to be on recruiting and retention. Gad, I'll go to you first. Do you have any thoughts about this?
Yeah, I when the mandates became public, I didn't think it would have much of an impact on recruiting and retention, but I think I was wrong. From what anecdotally from what we are hearing, it is a factor that, especially in some areas of the country and among certain populations, there is a very strong refusal to get vaccinated, and people, in some cases, people are willing to lose their jobs and remain non-vaccinated, and some people will not consider taking a job in a company that requires vaccination. So I think it's probably not the main factor that is creating labor shortages at the moment, but it's also not a trivial factor. It has some impact, especially in areas in the country where there is a strong share of people who are not willing to get vaccinated.
Mm-hmm. Frank, what do you think about this situation with the vaccine
Yeah,
mandates and the recruitment and retention issue?
I agree with Kat. If you think also about just enforcement, we know that in some states, some people don't want to get vaccinated, but we also know that some employers, what also your survey is showing, that they're also not happy with the vaccine mandate. So if it is not going to be fully enforced, then yeah, you either get troubles that some people may continue to work even though they're not vaccinated, but at some point maybe somebody will intervene there. So I think we will just need to wait a little bit also to see how this is going to play out. But if you just think about it, if still 1 in 10 really doesn't want to get the vaccine, then you have to find somebody else for that job opening. And if that happens at every company, then still that's going to have a big impact, I think, on the shortages that we already have right now. So this is definitely not going to make it easier.
And the only other thing I would add to this discussion is that we're also hearing reports about companies that are increasing or adding incentives for employees to get vaccinated, either a lump sum payment amount or some other bonus or perk to really, try to encourage people to get vaccinated so that they can come to work. And some companies have actually let go those individuals that haven't been willing to get vaccinated. So there are definitely consequences, implications for people in the workplace around these mandates that are impacting, the labor supply as a whole. And when we're thinking about this more long term, Gad, there is this potential for more enduring labor shortages. So what does that mean for long-term projections of economic growth? And what will the economy and the labor market look like if these labor shortages remain so severe in the coming months and years?
Yeah, so as we mentioned earlier in this podcast, we expected the labor shortages to ease towards the end of 2021 and during 2022. I still think it's going to happen to some degree, but we have to reconsider this and think what, in the case of a scenario where we actually have those severe labor shortages continuing in the next several years, because if that happens, I think it will have major implications for the US economy, not just in terms of recruiting and retention difficulties that we are already having, but also a very strong wage growth. And if wage growth is at around 5%, I think it's impossible that inflation will be just 2%. So I think if we have this very rapid wage growth, it will at some point impact inflation. And it will also, to the point that the Federal Reserve would not be willing to accept such inflation, and they will tighten the monetary policy and raise interest rates, and that will slow the economy, partly because of a higher interest rate, but also because of the severe labor shortages. We are seeing more and more evidence of businesses that are are not able to meet the demand for their goods and services. I was just in a restaurant a month or two ago, and half of the restaurant was empty, but I was told that I have to wait 40 minutes, and I asked, half of the restaurant is empty, and they told me we don't have enough waiters. So I didn't wait 40 minutes. I went to another place, and they lost some revenue as a result. And that's happening all over the economy. And I think that's also lowering economic growth and demand for labor. So I think we are going to see, if indeed we're not seeing a significant easing in labor shortages, we're going to see slower economic growth, higher inflation, and a tighter monetary policy.
Yeah, and when it comes to that wage growth component, especially, I would just add that it's not necessarily a bad thing, right, to see that wage growth in terms of company, demand for company products, because as long as wage growth can keep up with inflation, it increases consumers' purchasing power, right? They're able to buy more products and really increase their demand. So to the extent that connection between wage growth and consumption, that continues to remain tight, that all depends on the inflation projections. But there is that linkage there as well that could boost economic growth.
Yeah, the labor shortages are in some ways very good for workers.
Mm-hmm.
Not only their wages are going up, but also they are much more likely to find a job that they like. The employers would be more desperate to keep workers. So I think overall job satisfaction is likely to increase, and more people who want to work will be able to do that. So yeah, there are also very positive developments for the worker in a period of sustained labor shortage.
Mm-hmm. So on that positive note, I think that's a good place to leave it for today. I've been speaking with Gad Levanon and Frank Steemers from the Conference Board Labor Markets Institute about the main insights from the September jobs report. Gad and Frank, thanks again for joining me.
Yeah, thank you, Elizabeth.
Thank you, Elizabeth.
And thanks to all of you for listening. Please join us for the next U.S. Labor Markets Roundup as we discuss the October jobs report. Don't forget to subscribe to both Indications and Sustaining Capitalism podcast series from the Conference Board through your favorite podcast app. Thanks again for listening. I'm Elizabeth Crowfoot with the Committee for Economic Development of the Conference Board.
This has been Indications from the Conference Board.